Welcome back to South Florida Real Estate Update. I'm here with my friend Jeannine Henrion of Group 1 Mortgage. And I've got a question for her about mortgage rates. Sometimes I'll talk to you and ask what the mortgage rates are, and you'll give me a range of mortgage rates. And then I'll see something on the internet that will be way lower than what you have quoted me. Is there something going on here?
Well, Curt, typically if you're asking me where rates are ranging today, I'm going to give you a number that does not include paying points. Sometimes, correct. Sometimes when you're shopping online in the small print or in another section where they're, telling you what were the considerations for that advertisement, you're always going to see everybody's going to advertise the best case scenario. So they're going to assume that it's a purchase transaction and not a refinance. They're going to assume that you've got 20% down, and they're going to assume that you have a 750 credit score or higher. And then typically if you look at the APR and it's maybe around a quarter higher, there might be some points hidden in there, but they've got and they're not really hidden, they're disclosed in the APR, but the average consumer doesn't really understand what to look for. They just see that note rate that's exponentially lower than what they've been quoted by other resources.
Okay, so you brought up something that's one of my topics of confusion, I think, with mortgages: points. Define a point?
A point is 1% of your loan amount. So let's just say your loan amount is $200,000 and you're going to pay 1 point to buy down your rate. The cost to you is $2,000.
What do I get for that $2,000 that I might pay?
Of late, you don't get so much. We really, to be frank, because the Federal Reserve has kept rates so artificially low, the value in paying points just hasn't been there. But historically, it's reasonable to expect that for every point you pay, you may realize approximately a quarter reduction in your note rate.
Okay. Why would I do that?
If you're going to be long-term in the property, and of course market conditions create the value for paying that money. If you're going to be long-term in the property, it can save you a significant amount of money over time. And a good loan officer should be able to calculate for you your break-even point. Is it the 48th month, the 42nd month, where you've recouped the cost of that said $2,000 in your lower monthly payment?
It won't be the first month, but it might be after 4 years or 5 years, and then I'll be benefiting every month after that for what I invested in the beginning.
Correct.
Okay, but this isn't really happening now, and heaven forfend that rates go up, but if they do go up, we may be hearing more about points.
Well, actually, rates are starting to creep up a smidge, Curt, because the government has eased on their quantitative easing, where they were buying all the mortgage-backed securities, which is one more reason to reach out to me or another loan officer at Group 1 and get pre-qualified now.
Okay, Jeannine Henrion, Group 1 Mortgage, thanks for being here. I think I get the point about points, and I hope you do too. We'll be right back after this break.